Welcome back to Macro Crazy. Apologize for being missing in action a little bit this week. Had a cold and it kind of put me down. My voice was shot. But I'm back, so look for more videos from me. Anyway, so today I'm just going to cover some headlines from various articles that I think will at least add to the picture that's developing for 2023. Or for some, maybe it'll make it more confusing. But hopefully it helps. At least I'll bring it to your attention and you can do what you wish with it. Okay, the first one we're going to touch on is that the CPI number was pretty much in line with what was expected, which is confirming the downward trend. So we've hit the inflation peak according to the market, and that was good news for the market. The market rallied, obviously, on the news through the end of the week. That includes all risk assets, including crypto. So that tells you that people returned with optimism. Before you get too excited about declining inflation expectations, here was a headline from Zero Hedge about China's oil demand set to hit a record. They have to fill up and they're going to do a lot of it this year. And don't forget the SPR, that's the Strategic Petroleum Reserve that Biden drained basically to its lowest level in decades, has to be filled again. So there will be some big drivers to push oil, and of course that means gas prices higher. So I wouldn't say goodbye permanently to higher inflation. And another data point indicating we're not out of the woods yet is that Americans are finding it more difficult to pay their credit card bills. So that's definitely a red flag that there's some ways to go, and a recession in 2023 is still definitely a possibility, if not a probability. And if there's any doubt, basically the banks are telling you pain is coming for the consumer and therefore for them as well, because they are putting a lot more money into their basically loan loss provisions, planning for higher levels of losses moving forward, much higher. So there's your confirmation that there will definitely be some difficult times ahead. Despite the markets rallying strongly the last few days, everybody else is telling you tough times ahead. Finally, the last item I wanted to bring to your attention, last headline, is that basically we have a massive housing market bubble, which is deflating, hasn't hit collapse yet, but it looks like it could get really ugly with the pileup in inventory. Full disclosure, because of family considerations and whatnot, I actually just did buy a house. I got a good amount off, but I don't know if I overpaid or not, but I did what I had to do. I hope you're not forced into a similar situation. The market looks like it could get real ugly real fast. So, while the stock market may have rallied, and gold and crypto and whatnot this past week, what you have to think about is moving forward, what does it look like? And what it looks like is a consumer in pain, businesses kind of boarding up the windows and getting ready for difficult times. And that does not look like an environment for stock outperformance. And since the Fed has said they're not eager to cut rates, although the market's trying to force their hand, high, sticky interest rates, struggling consumer, and very cautious businesses is a difficult environment to make money in stocks or bonds. So on a generalized index basis. So basically you're going to have to look and pick and choose opportunities, whether it's in currencies, at a sector level, in and out, like swing trading. There are opportunities to make money as a macro trader. You just have to carefully pick through all the rubbish and all the noise that's happening and find it. Anyway, guys, and gals, I hope that was useful. I'll have more videos this week. Let me know in the comments if I missed anything, and I'll see you next time.